Right, good evening everybody, and welcome to the next webinar in the series, the VAT Windfall and Reclaims currently available. We're going to take a few minutes to wait for as many people to sign in as possible, so please bear with me while I go through a number of slides which will repeat themselves but will help us make the best use of the time this evening. My name is Dave Stubley and I am the RFU's Club Management and Volunteer Manager. And you should be able to hear me. If you can't, then please refresh your browser or check back in, but you should be able to hear me. Moving forward, please, in the bottom right-hand corner, you should see a chat function, which we'll make use of in terms of asking questions, answering questions as possibly we can. If you use the chat, please share your name, your club, your role in that chat function. Help us to understand who's asking what questions. We'll try and answer some of those as we go through this evening. But obviously, if we can't get to all of them, we'll create a report and come back in due course, especially as the expert is actually going to be presenting. If you experience technical difficulties as we go through this, please try refreshing your web browser or coming out and trying to log back in. Hopefully that won't happen, but obviously over using IT that can occasionally. But yes, please refresh your web browser as we move forward. Also, tips are, please, minimize the distractions around you. Close any other applications, turn your phone off or on silent. Just helps to understand and to keep it as quiet as possible. I'm just going to go, for those that have been, I'm going round again, but again, just trying to make sure that we keep everybody informed of what's happening. So again, this evening's the next webinar series on VAT, hosted by Russell Moore. Again, if you've just joined, you should see me and you should be able to hear me. If you can't, please refresh your browser or try and log out and log back in again. Again, there is a chat function which will make as much use of as possible this evening. Any questions, any points, any thoughts, any sharings of good practice, please use that. And again, to help us identify, please put your name, your club and your role into that in that chat function. We'll try and answer some as we go along, but obviously we will get a report at the end of this evening, and we'll come back to answer those if we're not able to do them all. But please share your chat, and obviously, share information between each other. Again, as I say, if you're experiencing any technical difficulties, please try refreshing your web browser. Occasionally it does happen, or at the very worst, log in and log back out again. And again, put any disturbances at the minimum. Again, just while we wait for the last few people to arrive, again, just introducing the VAT Windfall webinar, second in our series, and we'll be hearing from Russell in a little while. Again, and so thank you. Right. Again, just a final reminder, please use the chat function that you can see in the bottom right-hand corner. Please share your name, your club and your role. Use that to ask any questions or to share good practice that you're currently taking in this arena. Any questions that we're unable to answer this evening, we'll produce a report and get those out after the webinar. Oh, sorry, got on one too long. So hopefully most people that are going to join will join. And so let me introduce to you the speakers this evening. So thank you for joining this evening. Thank you for giving your time up. The session this evening is going to be around VAT. And it's going to be delivered by Russell Moore. Russell is a previous partner at Safri's Chapness, and has been working in the not-for-profit sector for a number of years. He got involved with the RFU 3 or 4 years ago as he stepped away from Safaris, and has been working with us and a number of our clubs over the last 4 years. That has seen some significant savings and reclaims produced by our clubs, but at the same time also ensuring that some of our clubs are doing this correctly. So without further ado, let me hand over to Russell Moore.
Thank you, Dave. So there's 3 potential VAT windfall opportunities I would like to cover this evening, and they are related to fundraising events where there is a relief. It's applied in part by some clubs, not by others, but there seems to be a potential opportunity at the moment which many clubs are realising, and it is producing substantial windfall claims. As we will see, we can go back for 4 years on this relief, and it is surprising how much VAT can actually be recovered that's been previously declared. The second issue will be the issue of VAT that's incurred on rugby-related costs. A lot of clubs mistakenly do not recover VAT they incur on rugby directly related costs. And we'll see as we go through that section that it's wholly possible. And I would anticipate that most community clubs should be able to recover all VAT they incur, including that incurred on rugby-related direct costs. The third area will be where material amounts of VAT are incurred on capital projects. These can at times be quite technically difficult, but as we'll see as we go through, most clubs will be able to make a pretty healthy VAT recovery on capital projects, irrespective of what it is, whether it's clubhouse, pitch related, facility related, or other. And we'll see that the opportunity exists potentially for up to 4 years after the work is carried out, and in certain cases up to 10 years after the work is carried out, there may be an opportunity to go back and revisit the VAT that was originally recovered. So if you've under-recovered, you potentially have 10 years to go back and seek to redress that. One club recently did that and found they are now awaiting a payment of £37,000 from HMRC unexpectedly. So it is, when it works very well. Oh, so the little poll popped up.
Okay, thank you, Russell. I'm Alex Thompson, Club Services Manager. I'll be in the background today as the producer of the webinar. So when you see polls or chats come up, I'll just come on and just talk you through what's going to happen. We also as well have Dick Smith from Lowestoft and Yarmouth, the Assistant Treasurer, who will take us through how they've gone about getting back some VAT later on. So what I'm going to do now is, you can see on there it says, is your club VAT registered? I'm just about to launch the poll. I'm going to ask you to complete it. Now, if you are on full screen, you won't be able to see the poll, so you'll have to come out of that for a moment just to do this poll that I'm just about to launch. So the poll is now launched. So if you can complete that in front of you, that would be good and stuff. So I'll give you a bit of moment to complete that poll and stuff. So last 10 seconds, should be nice and easy to do that one, nice and short. Okay, and I'm just gathering those poll results. And I'm just going to launch the results now. So you should be able to see the results in front of you and stuff. I'm going to pass back on to Russell to continue the webinar. Now you will have to close the polls yourself and stuff to see the slides again. But we'll be using polls and chats throughout this webinar. So I will pop up at times just to make sure that the polls and things are running. Thanks very much. Over to you, Russell.
Okay, thank you, Alex. So it's about now you realise you're in a 1 hour VAT talk. Okay, so the first issue is fundraising events. And this is particularly relevant if you are already registered for VAT, so you potentially over-declared VAT historically. You have held fundraising events in the last 4 years, and we'll look at what a fundraising event is. that you also have a bar and catering function, not essential, but this is where the relief is particularly material. And fourthly, where you do have these facilities that you've over-declared VAT on event evenings or days. So a fundraising event, there's two key criteria that you have to meet that enable you to treat an event as a fundraising event. The first one, and by far and away the most important one, is that the principal purpose of the event is to raise funds for the club. So it doesn't have to be the only purpose, but it must be the principal purpose. So if you have a summer awards night, you have to consider whether the principal reason for that event is to raise funds for the club, or whether it's the presentation evening. And this is a very important point. HMRC are very strict on this issue, and ultimately, if there's any doubt, then it would be wise to have a committee minute or something of that nature to agree amongst the committee that the principal reason for the event is to raise funds for the club. Sometimes it's very clear, but at other times there could be a dual purpose for the event. So just to clarify, the key issue is that the principal purpose of the event to qualify for the relief, which we'll look at in a second, is that its principal purpose is to raise funds for the club. The second test, which has actually reduced in importance recently, is that the event is promoted as a fundraising event. There was a VAT tribunal 12 months ago where this was questioned as being a requirement, and the tribunal agreed with the taxpayers that it's not actually a requirement. So whether HMRC follow that tribunal decision or not is a different matter, but that second criteria has reduced in importance, I think, since that tribunal event. So what type of typical events have we been looking at? These seem to come up quite regularly: fireworks, bonfire night, summer ball, specific fundraising speakers dinners, VP lunches, VP events, ladies' days, and also mini and junior tournaments. Although a lot of clubs will exempt team entry fees for minis and junior tournaments as a sporting event, if you treat them as a fundraising event and the principal purpose is to raise funds for the club from that event, then potentially you can extend that exemption to the bar and catering sold on the day. So that's where the benefit would be. Oh, another little poll popped up.
Yep, so thank you, Russell. So we want your feedback as well as we explore this. So using that chat function on the right hand side, again, if you're on full screen, you're going to have to come out of that to see the chat function. But please start sharing in the chat what is your most profitable fundraising event? Yeah, before the coronavirus hit, and also as well now, you know, anything that you're running currently. So just share that and we'll start seeing what's coming through on the chat, and I'll pass you back over to Russell.
Okay, just move on there. Just before getting on to the VAT declared on income, just to concentrate a little bit further on what constitutes a fundraising event. HMRC are quite clear that to be a fundraising event for this purpose, there has to be, and it has to be an incident with an outcome. So it has to be an event that is there to raise funds for the club. So it can't be a normal bar night in the clubhouse bar that merely happens to have somebody on. It has to be a specifically engineered event that is there to raise funds for the club. HMRC make a comment that a social event which incidentally make a profit do not fall within the exemption. The clear intention must be from the event that it's a fundraising evening. This perhaps can be where promoting it as a fundraising evening might help cement that view. Also, some clubs seek to treat pre-match sponsors' lunches as fundraising events. To my mind, that they don't qualify because they're not a specific event. They are a sort of regular trading activity. And again, HMRC are quite clear that the exemption relief is not intended to provide a tax relief for regular trading. It has to be a specific event. Not necessarily a ticketed event, but a specific event held to raise funds for the club. And I think we would all, it may be difficult to describe, but we'd all know what they are. As we were saying earlier, things like VP lunches, maybe 3 or 4 a year, captain's lunches, things of that sort, where there's this very specific event. So moving on to the relief itself. So what the relief does, it enables a club to exempt from VAT income which is generated from that event. So things such as ticket sales, outside bar, inside bar, merchandise sales, and importantly, clubhouse bar. But again, I would emphasize that in order to fall within the relief, the clubhouse bar has to be part of the event. So if it's open generally for members to attend, and event goers just happen to be able to go to the bar as well, that may question whether the bar is part of the event. But if the bar is on and it's only accessed, for example, through a ticket to a fundraising event, then that would clearly be part of the event. Merchandise also qualifies, but only merchandise sold on the day. If it's sold after the event, then it doesn't qualify. And the last one there perhaps is a little bit surprising. So sponsorship. So if you get a corporate to sponsor the event, if that sponsorship is solely related to the fundraising event, then that is exempt from VAT. Clubs would normally want to treat sponsorship as taxable to increase their taxable income. So if you're in that position where somebody sponsors an event, if you widen the sponsorship to be greater than the event, then you may find that's actually more beneficial to you on the basis that corporates will invariably get their VAT back, which you want charged to them. So a little look at a typical type of event. So here you have ticketed sales, outside bar, burger bar, and the clubhouse bar. So there's VAT having been declared on this event of £2,041. So it may be that you've already exempted the ticket sales, but you've declared VAT on the bars, not realising that the exemption extends to those incomes. Of course, the other side of the coin is that you will have incurred VAT on related cost. So, for example, this is a typical fireworks display where you will have incurred VAT on things such as the fireworks, security, portaloos, and of course the bar itself, where there's a nice little typo with a comma in there, which shouldn't be there. So the bar is the biggest cost. The issue here, as we'll see, is that to optimize the relief, you need to be able to retain your ability to recover VAT on bar costs. If you're prevented from recovering VAT on bar cost under the partial exemption rules, then clearly it reduces the benefit of exempting VAT on income. Just to emphasize that point, clubs are able to recover VAT they incur on cost that either relate directly or indirectly to their exempt activities, providing that VAT per annum is no more than £7,500 in any VAT year. So costs that would apply to that would be, for example, equipment such as balls, a scrum machine, things of that nature, potentially kit, things which are given to players in return for their exempt playing subscription. So VAT on those costs would be termed as exempt input tax. So providing that exempt input tax is no more than £7,500 in any given VAT year, then clubs can recover that in full. The usual position is that most community clubs will be able to make a full VAT recovery because they will be well within that limit. 7.5k equates to £37,500 worth of net expenditure. So not many clubs are going to spend that a year on rugby related cost. It does also include a proportion of overhead cost, but again, even with the inclusion of that, most clubs are going to stay well within that 7.5k limit. Clearly, the issue with the fundraising event is that you're converting taxable income into exempt income. Therefore, any specific cost relating to that event is going to be exempt input tax. So on this little example, we've got VAT that the club is incurring in the general course of events on its exempt activity of £3,500. The fundraising event itself had costs of £1,491. So our total exempt input tax for the year, £3,991. So that's well within the 7.5k limit, therefore is fully recoverable. And in terms of the fundraising event, that £1,491 remains fully recoverable. So you can reclaim VAT you've paid out on bar income and other fundraising event income and still retain the ability to recover VAT on cost. So even if you didn't get that VAT back, you would still make a benefit, but it would be reduced. So the optimum position, as we're seeing on the slide, is if all that is recoverable on related cost, we're making a saving of 2,041. But even if the VAT is irrecoverable, we're still making a saving of £550. So it's still worth doing, but obviously reduced. So I think the issue, the opportunity which seems to exist at present and that a lot of clubs have tapped into is to identify events which you've held in the last 4 years. So they must be specific fundraising events. And I'm sure most clubs tend to have 2 or 3 very specific events a year, larger events, and maybe some smaller events to add on to that, such as VP lunches or events which they could say distinguish from normal activities within the club and are held principally to raise funds for the club. So, but don't include regular trading such as pre-match lunches. To my mind, they do not fit within the relief, and HMRC may question why you've included them and are likely to want to take them out. You need to quantify the output and input tax. So if you have declared VAT on any income relating to an event, you've got the potential for a claim. You then will need to ensure that the VAT which you are likely to have recovered historically on those event costs, whether that remains recoverable because it's kept you within the 7.5k exempt input tax allowance. And to do that, step 4, you will need to recalculate what's called your annual partial exemption calculation for each year that you wish to make a claim. You will not be able to establish the VAT recovery position without making that calculation first. And I would strongly recommend that you seek some professional advice, certainly for step 4 of those tasks, if not 2, 3, and 4, because step 4, if you fail at step 4, it will invalidate your claim, and it's a very important part of the process, which I'm sure Dick will emphasise a bit later on. So once you've identified your events in the last 4 years, you've got VAT which you've over declared on your VAT returns, which you can now recover. If the net aggregate of all of that VAT is less than £10,000, you can merely adjust your current VAT return. That's very effective and efficient because you will get the benefit of that very quickly. So if you have a March return due on the 7th of May, you may realise that within a few days, as a lot of clubs have done. So if it's under 10k, you can merely adjust your current VAT return, and that's done by including a negative figure in box 1. And even if that turns box 1 into a negative figure, you merely need to put a minus on the VAT return, and that's quite acceptable. So that will go into box 1 and box 3 as a negative figure. If the claim is over 10k, then you need to submit a formal error correction disclosure to HMRC. They remain open and they are accepting claims by the email which is set out there. However, claims can take several weeks, probably months, to be reviewed and settled. Normally HMRC are very slow anyway, and they're usually taking 3, 4, 5 months. It may even be longer in the current climate, or it may be speeded up. HMRC seem to be very aware of the current economic climate, particularly for small voluntary organisations, and after 28 days following submission of your claim, you're able to chase and pursue. So some key issues to emphasise. I'd strongly encourage you to seek professional advice in making a claim. A relatively small fee could save you a lot of money and will ease the path for getting your claim through smoothly. If you've missed technical issues, it could trip you up. Of particular relevance, and HMRC will specifically look for your annual partial exemption calculation to be recalculated to reflect the revised position of the fundraising income and VAT on cost. Without that, they will not settle claims, no matter how valid they may be. So I would encourage clubs to seek professional advice. You need to consider this going forward, so it's not just a historical windfall that's important. You can get an enduring benefit of looking at events in your calendar and which events would you like to treat as exempt by promoting them and by establishing them as principally to raise funds as fundraising events. And finally, on this point, the issue, just to re-emphasise, to manage your 7.5k allowance on exempt related costs. It is an allowance which is given to all not-for-profit sports clubs. Make the most of it. So it means you can incur VAT on cost without having to declare VAT on income. So make the most of it. It's a tax relief, and ensure that you maximise it. And that's the end of the first little section. Over to Dick.
Just before Dick comes on, sorry, Dick, to tap in because I didn't give you the proper introduction. So just to say that we've got Dick Smith from Lowestoft and Yarmouth on, who's going to actually take some of the technical stuff that Russell's been talking about and tell us about actually how it's applied in a rugby club setting. But before I do that, I would just like to wish him a very happy birthday, because he's come on to the VAT webinar on his birthday, which I think is absolutely excellent. Sorry, Dick, to come across there. Please, over to you.
Okay, thank you. Good evening, everyone. Yeah, I guess Lowestoft and Yarmouth are here to provide an example of and proof that what Russell's been talking about does work. It can be complicated, but it does work. And I'll just take you through some of the examples of how we applied it in the last 18 months or so. Now, obviously, we're an old established club, 1879. We're the most easterly in the UK, which has its benefits sometimes, but not others. We definitely fall into the SME category, so a relatively modest turnover, 110,000. So we're definitely small, medium enterprise, and I would guess something like an atypical community amateur sports club. Now, we did actually achieve a 14,000 refund last summer, basically by moving around the way we were approaching VAT within the club. And we found that we really hadn't been taking advantage of the de minimis rules and not applying the partial exemption concept as well as we could have done. And so, yes, we took professional advice. We had to redo 3.25 years worth of returns, but it can be done, and as you can see, we achieved that full £14,000 refund. The other point I'd note before moving on to the next slide is that it does have a relevance later on, is that we are potentially considering a really major capital project in terms of the sale of our Gunton Park home and relocation to and building of a new facility, which slightly complicates our approach to these things. So I'm going to take you through now two specific event examples that we had. Let's wait for the next slide to load. Okay, here we go. So this is example one is our speakers dinner from April last year. Speakers were John Bentley, an old friend of the club. We actually have a housing estate called Bentley Drive, named after the Lions he toured with, not far from the club. So Bentley and McGeechan, it was held off-site at the Ivy House Hotel, and the graphic you see on the side will obviously become a collector's item, because a final point on the slide here.
Okay, I think we've lost.
Sorry now.
I think we've lost Dick there for the moment. Russell, are you able to step in and take over that for the moment?
Yes, I'll have to go on to my next little section.
Yeah.
So I will just bear with me a second, please, and I'll move on to where we need to be. So I worked with Dick to get their VAT claim through. Dick was very engaged by the process. He found it quite interesting, I think, and clearly getting 14k back from HMRC is always very interesting. But he really got to grips with it, understood it, and delved into it, and it paid its rewards. So we're just coming on to the second section now. So this is the second opportunity which I think exists. Oh, Dick is back now. Alex, would you just like me to carry on?
Yeah, you carry on, please, Russell.
Yeah, okay. So the second opportunity, potential opportunity to reclaim VAT is on rugby-related costs. As I was saying earlier, some clubs mistakenly believe they're not able to recover VAT on rugby-related costs because the subscription income from players is exempt from VAT. That's not the case. We have this £7,500 allowance per year, which covers most clubs, except in years when there's capital expenditure. So the £7,500 allowance covers both direct rugby-related cost, as we were saying previously, things like balls, maybe kit, certain facilities, depending on the use, and it equates to £37,500 worth of net expenditure per annum on those costs, which most clubs are not going to spend anywhere near that, except if there's a capital project being undertaken. So in order to work out whether you're within that £7,500 limit, you need to, on posting a purchase invoice into your VAT system, you need to be able to allocate it into one of three different categories. The first category is VAT incurred on cost that directly relates to your taxable activity. So that will invariably be bar, catering, maybe shop, merchandise, and potentially international tickets. That VAT can only relate to your taxable activity, and accordingly you're able to recover it in full. The second category is VAT incurred on exempt activity, as we've said, and that potentially will include items given to players in return for their subscriptions, potentially facility costs, depending on what your facilities are used for, and we'll look at that in a second. And thirdly, fundraising events. So if you incur VAT on those costs, then that will go towards your 7.5k annual exempt input tax allowance. The third category is VAT, which doesn't fit into either of those categories, taxable or exempt. It's VAT on overhead, costs such as utility bills, Sky TV, BT Sport, these sort of things which are generic to the club, clubhouse building costs, these sort of things. And that goes into a partial overhead pot, which you then need to attribute back, and you estimate part of it relates to taxable and part to exempt. And that's only done on turnover, so it's very straightforward. So if your taxable turnover is 78% of your total turnover, so basically your bar sponsorship income, ticket sales, shop is 78% of your total income as a club, excluding financial matters such as loans and grants, then you'll be able to treat 78% of that partial VAT as taxable and get it fully back, and the remaining 22% goes into exempt. So you add the directly incurred exempt to the 22% overhead VAT to compare to your 7.5k limit. So that's a little bit more complex, but once you get into the swing of that, that's fairly straightforward. And you only need to consider that annually under your partial exemption annual adjustment calculation. Two common errors that come up on that frequently. One is playing kit. So a lot of clubs will treat all of the VAT they incur on playing kit as being an exempt related cost. That's not necessarily the case. Clearly under 14 kit is invariably zero rated as a separate relief. But if playing kit, there's three different categories of playing kit. So if you buy playing kit for sale, then that will be taxable. So the VAT on the playing kit you've bought will be fully recoverable. If you buy playing kit to give to players as a benefit under their subscription, that potentially is exempt input tax, unless you have a sponsor's name on it. So if the kit has a sponsor's logo or a sponsor's name on it, then that playing kit can go into your partial recovery pot, which means a lot less VAT on playing kit relates to exempt, and it helps you keep within and optimize your 7.5k limit. So playing kit, you need to make a distinction between those three categories: bought for resale, given to players, or given to players but with a sponsor's name on it, in which case it's partial. The other common error, and perhaps more importantly, is playing facilities. So if a club incurs any cost on playing facilities, such as pitch work, floodlights, changing rooms, those sort of costs, it's not necessarily directly related to only directly related to your exempt players' subscriptions. If you let your playing facilities, and that's a little minefield all of its own, I'm afraid, but if you let your playing facilities and charge VAT on the letting income, then any VAT you incur on playing facilities, so such as floodlight installation or pitch drainage, things of those nature, building new changing rooms, that can all go into your partial recovery pot as well. So under our 78% example, you would start by making an automatic VAT recovery of 78% on costs which predominantly relate to your players playing. That's how the rules work, and it's absolutely fine. And that rule equally applies whether the capital cost is under 250k or over 250k. Although if a project is a major cost and is over 250k, HMRC do have more power to consider the actual use, but I wouldn't worry about that at present. Certainly if you're involved in any capital project over 250k, my experience is that most clubs will get the vast majority of VAT back with some good advice, but I think you would be very wise to get professional advice, as that will certainly optimize any VAT recovery that you're able to get. Putting that the other way around, it's unlikely that if you do incur VAT on the capital cost that you will lose all or most of the VAT. If you are in that position, then you need a professional to look at it, because that is not the right position, and it's quite easy to manage to improve that VAT recovery through some very simple steps. Little chat.
Thank you, Russell. So over to you now. If you're in full screen, you need to come out to see the chat function. But put into the chat, what examples do you have of exempt input tax for rugby-related costs? Please share what you think in the chat. It's great that we've got Dick back. What we will do is we will run through to sort of the end, so going through VAT on rugby-related costs, VAT recovery on capital projects with Russell, and then I'll jump the slides back for Dick to come in so he can share how Lowestoft and Yarmouth have utilised VAT reclaims. Yep. Over to you, Russell.
I'm conscious time is marching on, so I'll crack on. So just to emphasise this point on facility costs, I always encourage clubs to draw a distinction between equipment costs and facility costs. Both relate to rugby, but it's potentially you're able to treat them differently. So the key is, are all facility costs related to exempt playing activity? So is your pitch purely used by your players, and therefore must any pitch work be exempt input tax? Invariably, that's not the right position. If either you have a gate admission side where the pitch is used to charge the spectators pay an admission, which is VATable to watch your first team, or you let your facilities at any stage throughout the season. It doesn't have to be frequent or regular. It can be irregular or infrequent. And there's VAT due on that letting, then your facilities are partial. They're not exempt. And that can help tremendously to keep your operating costs, the VAT on your exempt input tax below 7.5K, so fully recoverable, but particularly on capital projects where you're going to incur material levels of VAT. I would strongly encourage you, if you're having a facility item improved, to ensure that those facilities, your playing facilities at your club, are used both by your players but also for either external letting or for a taxable purpose, be that maybe used by the local CB for semis or finals, letting to another club for training or whatever that might be, or you have a gate admission side. So with that taxable use of your playing facilities, you will dramatically increase your VAT recovery. Historically, HMRC have not been very generous on this aspect. You may have incurred VAT on a capital project, and HMRC have disallowed the VAT, either partially or wholly. Invariably, that is the wrong position. I would strongly encourage you, if you've had any HMRC commentary or ruling on this in the last 4 years, to question that now and maybe seek professional advice, depending on the value. HMRC have not applied this equally, I don't believe, or equitably, because they're not aware of the minor use. And the legislation is very clear. In order to be exempt, it has to be wholly and exclusively. So even if you let a facility once a year, that is not wholly and exclusively, and you're perfectly able to treat your VAT on facility costs as partial rather than exempt. So this would typically come up on projects including changing rooms, floodlights, drainage, pitchwork, that sort of things of that nature. And you have 4 years, you have a 4-year rolling window to redress issues where you've incurred VAT and not made the proper level of VAT recovery. Which brings us on to the third issue. And this is similar, but on more material capital projects where serious amounts of VAT are incurred. Oh, I have a little poll.
Thank you, Russell. So the second poll of this evening's webinars, I'm just about to launch it now, so that should be coming up in front of you. If you can't see it, it's probably because you're in full screen. You'll have to come out of that to see the poll. So please answer that now. So has your club completed a capital project in the last 4 years, last 10 years? No, or you don't know. So yeah, just giving you last few seconds just to complete that. I'm just going to gather the poll results in so I can see that quite a lot of you have done one in the last 4 years, and I'm going to share those results with you now. Remember, you will have to take it off your own screen. It won't vanish on its own. So I'm going to pass you back over to Russell, but thanks very much for...
Okay, so just to continue. So effectively, from a VAT perspective, there are 3 types of capital project. One will be clubhouse related, so clubhouse social areas or changing rooms, extensions, refurbishments, rebuilds, relocations. Second type will be facility related, so pitch, floodlights, changing rooms. And then thirdly, there could be general access or site works. And all 3 look different on the face of it, but to my mind, you should be able to get them all back to the same position where you are able to recover a pretty healthy level of VAT on all those different types of project. So for looking at them individually, clubhouse, although the clubhouse will incorporate potentially your bar and catering function, the use of the clubhouse by players is deemed to be a facility and advantage of membership. So as your playing subscriptions are exempt from VAT, your clubhouse social areas are a partial area. So if you were to renew your furniture within the clubhouse, that would not be automatically fully VAT recoverable. It would be partial. But as we've been saying earlier, that should fit within your 7.5K allowance per annum and be fully recoverable. And the same principle applies to more major projects, facility related type projects. So providing your facilities are used for some taxable purpose throughout your VAT year, you can partially recover the VAT. It may be on larger projects. This is where VAT restriction applies, because the exempt element will be over £7,500, and therefore in that year you will be what's called partially exempt and not able to recover your exempt input tax. But it may be that restriction is restricted to 1 year, or maybe 2 if the project extends, but you might be able to manage that process to mitigate any VAT loss. And the third area is not facility or clubhouse related, car park work, access work, those sort of things. Again, that clearly relates to everything the club does. So if you do have a clubhouse with a bar or catering, then those works can be treated as partial because they relate to everything the club does. So the key really on this issue is on facility projects or clubhouse projects, where you must ensure that there's an element of taxable use. So where you do have a bar and a clubhouse, that's a given. But if you have specific facility related works, then make sure that you do have some taxable use of those facilities. And that will enable you to recover potentially most of the VAT on projects. And that level of VAT recovery will reflect your taxable income as a percentage of total, as we were saying earlier. Invariably, that's between 60 and 90%, which, is on a major capital project, that can be a real deal breaker if you're not getting those levels of VAT back. So I would strongly encourage, if you've got any capital project, A, get professional advice, and B, ensure that you have taxable use of your facilities. Taxable use of facilities, as we were saying earlier, can include a gate admission side or letting. Letting of sports facilities by not-for-profits is quite complex. It's not automatic, and there are exemptions that apply, particularly if you're letting for 10 sessions or more. But if you're letting ad hoc or to the county board, for example, for a match, rep match or a semi or final, then you should be charging VAT on those and not arranging it, the letting under a contra. Make sure you make a charge for letting your facility, which is taxable, and that gives you the taxable income to justify recovering part or all of the VAT on any facility or capital projects. So the only exception where no VAT recovery will apply is where you've got no taxable use of your facilities at all. Your facilities, your playing facilities, are solely used by your players for training and matches, and therefore all costs relate to benefits provided to your players under their subscription. So that's a very rare position, and it should be quite straightforward if you manage it properly to shift that position to where you do have some taxable letting. Oh, we've got a chat poll.
Thank you, Russell. So yeah, you can get straight into that chat. So if you have had a capital project, please share it away. Please put it into that chat.
Yep,
And,
I'm being told to hurry up, so I will hurry up now. We've got a capital project, so the VAT recovery appears complex, but it's not that complex. It merely reflects the taxable percentage in the year in which you incur that expenditure. And again, you might potentially be able to manage that to optimize your recovery in that year by advancing sponsorship payments, maybe, or ensuring that you're optimizing your ability to recover that. So typically between 60 and 90%. So taxable income is typically between 60 and 90% of clubs' total turnover where they have a bar or catering function. And don't forget to exclude grants, donations and loans of that sort of from that calculation. Again, that makes a very large difference. I've just looked at a club where they include RFU grants in their VAT partial exemption calculation. We've gone back over 4 years and it's given the club over 20k additional VAT recovery. Very welcome. So finally, if no VAT's been recovered, or if VAT recovery has been less than it should have been, you've got 4 years to redress that by making a retrospective claim. If your cost of your project net of VAT was 250k or over, you've got 10 years to redress that. So even a project which took place in 2010, you could potentially get VAT back now, 10 years after the event. This is under what's called the capital goods scheme, where you have to do a 10-year adjustment. Just looked at a club recently who have just benefited by £37,000 because their taxable income over that 10 years has increased. Not surprising, new facilities, bigger bar, bigger function area, far more taxable income. It's what you'd expect. So again, you've got 10 years. Any project in the last 10 years over 250k, I would strongly recommend you go back and have a review of how you treated the VAT on that cost. And that brings the VAT talk, my element, to a close, Alex.
Right. Alex,
thank you, Russell. Now Alex, we're going to try and go back.
Sorry, I'm just going to move it on one slide, and then we'll go back. Just before we go to Dick and finish off with the example, just to say that Russell is a retained consultant with us. So if anybody's on the chat, there is there's a number which is on the slides at the end, which I'll put up. So please make use of that. We've also negotiated a reasonably good rate. Russell always tells me it's a quarter of his commercial rate, but there's an RFU rate around £100 an hour. Obviously, in this current climate, obviously, cash is quite key. So if clubs feel that there's something that Russell could work with them, then he is happy to work a fee out on a basis of if there's no success, there's no fee. But if there is a success, there's a percentage of it. So please make use of what Russell has done. Some of that fundraising events has already seen over £250,000 reclaims coming in for 9 or 10 clubs over the last couple of months. I shall leave it for the moment and hand back over to Dick and Alex.
Okay,
Dick, should be to see your slide, mate.
Slides back, thank you. So again, this is the example of our speakers dinner. As you can see, the maths aren't that complicated. Ticket sales with VAT on them, normal VAT treatment, we'd have made a profit of 3,351 because we didn't have to pay over the VAT on ticket sales. That gets added back. So the actual result for us was just over £5,000 margin on the event. But a large portion of that, you can see, coming from the ability to apply the concession that the revenue granted. The next example is our firework event. We hadn't held one for 28 years. We did it in November last year. We sold tickets online and on the gate, and we also took £5,264 in bar and food sales, which is a slight complication, but I'll come to that, but they're not included in the numbers on the next slide. So the next slide, again, just shows the rough numbers from the firework event. You can see ticket sales, glow stick sales, a limited amount of VAT input because there was nothing on the fireworks. So our normal margin, normal profit would have been 5,724. Again, we didn't have to pay over the VAT on ticket sales and glow stick sales. So we made another £2,360 as a result. So obviously the concession in these simple examples is very worthwhile using. But while they're simple, the one thing that we came across was we had to work out that, or recognise that as we took advantage of the concession, we were actually moving what would have been taxable revenue to exempt revenue, and the 60 to 90% number that Russell was referring to earlier, well, we normally run at around 78%. Now, applying the concession reduced this number down to 58%, and so as a result, we were a bit concerned about taking that too low, so we decided not to apply the concession when it came to the bar and food sales on the event. We could have got another £1,000 back, but we thought we were in danger of taking that percentage too low and having another knock-on effect. So again, just to close off with our example, as I say, we didn't we didn't want to take that ratio down too far, partly because we're planning a very, very major capital project in the next 2 or 3 years. And it's certainly clear that because of the way that applying the concession means that you shift income from taxable to exempt, and the importance of that ratio when you come to a really major project, we would almost certainly not apply it in the year before we undertook the capital project. But, and I guess our closing point is, under normal circumstances, applying that concession and taking proper advice on VAT is definitely the right thing to do. We're living proof that it works. We use Russell very successfully and very cost effectively. So I would very much urge you to all do the same. That's it, Alex.
Thank you very much, Dick. What I'm going to do now is, this is the final poll of the evening before we all go and clap for our heroes and the fantastic work of the NHS at 8 o'clock. So I'm just going to launch this last poll and stuff. And it's a bit about how you feel right now. You know, after you've sort of seen the stuff that's been done tonight from Russell and the example from Dick and how their clubs are doing it. So how confident are you that the club could get a VAT reclaim? The keywords there, with the right support. How confident are you that you'll do that? So last few seconds before I finalise that poll. Okay, it's coming through now. So good. Most people are confident or very confident. So I'm just going to put them up in front of you. Stuff just to finish it off. And you'll have to close that yourselves.
Fine.
So that concludes this webinar tonight. I'm going to pass over to Dave just to finish this
Okay,
off.
well, thank you for listening this evening, and my special thanks go to Dick, especially on his birthday. I bet he hasn't done that one before. And to Russell more for the presentation. You can see the final slide up there. As I've said, Russell especially is one of our retained consultants. There is his email address and his phone number. We have a free helpline, so please make use of it, even if that's just to test a few things. The presentation slides and the recording will be made available to everybody that's on the call. That will come out in the next couple of days. We will then take away the questions that have been asked and clearly give them to Russell to answer the more difficult ones. But thank you for all the chat on that particular platform. And it just leaves me to say you've got 5 minutes to be outside and to clap our NHS heroes. Thank you.